Hey, how's it going everyone? Dennis here from primetraders.com, and in this video what I want to go over is the best types of trades. What we're looking at is gold daily chart. Now, before I go into this, I will explain very quickly how we trade at primetraders.com. Rarely do we look to stay into trades for too long. So we did have a couple of trades on gold this morning. We use tick charts of CTrader to do this, but 90% of our analysis comes from TradingView. So I just want to show you, well, let me educate you on something. Let's start with that. The best types of trades is when you can connect a couple of things together. Let's connect. Let me explain with gold. With gold, we have technical analysis, which suggests that on this daily chart that we could be at a support as number one. We have kind of pushed towards the upside. We're still holding the structure lows of the daily chart. And what do I mean by that? This is the structure high, and then the low is not here. These are the lows over here, and we're kind of holding them, right? You can clearly see price action holding these levels. So the highs have been going lower with the possible attempt of price reversing up here that got completely killed off. And we'll get into specific education about technical levels, key levels, and so forth, blah, blah, blah. All of these things will be covered later in other videos. But for now, just want to show you this attempt on gold. So at the FOMC meeting last Wednesday, we had this big drop down here. Now you might be thinking momentum's down, and sure, yes, it definitely is. And the fact that the highs are not, attempting to go up is also a problem. But here's why I think that there is a good chance of gold reversing. First of all, we're using this level over here as a clear-cut support. The way we use the fibs is pretty simple. We focus on the current high and the recent low for longs, and the current low, recent high for shorts. Since I'm looking for longs on gold, and we released an idea on silver, this is the current high, this is the recent low, and we've got 38.2 and 30%. Don't ask me why, these are the numbers we use. This is exactly how we trade, and we're pretty successful with this. Now, RSI, which we also use in conjunction with the fibs and price action, is also pretty much heavily oversold. Came all the way down to 5, but this is a very short-term RSI. It's set to 5 because we are short-term traders. I don't want to, get into a move from up here and ride it all the way down there. I'm not that kind of guy. I prefer to get in up here, ride all of this here, sell each of the highs, and get out when price approaches a specific level. But anyway, what I want to educate you in this video is the best types of trades. Now, I'm a firm believer that technical analysis works. It just does. And I'm not the only one that says it. You all agree too. But I also think it's very important to connect it to fundamentals. Right now, we're creating a small course. I'm not going to go over that, but I do have a lot of things in my mind that I want to share with you guys. And in that course, I'm explaining exactly how you can connect this. A very simple way is using a website like investing.com or even TradingView, by the way, because they do have financial news out there. And you can see things. But one thing is that US Treasuries have taken a bit of a knock. Okay, they also started going down. You can see here, lower highs and lower lows. In this case, the structure lows of this play have actually broken out. So I'm expecting Treasuries to at least move southbound for now. The next key support level would be around this area over here. After that, you guys can see, so it continues towards the downside. With Treasuries going down, I think that gold has an amazing opportunity, and silver, both gold and silver, have amazing opportunities for upside. I'm still holding silver, by the way. I took it early in the morning, and I'll hold it for a potential breakout. Rarely do I open swing trades, but as you guys can see here on silver, a very important bullish continuation pattern is this. We have a straight line resistance. Sorry, my mouse sucks, so I can't really do a straight line, but you guys see it. It's listed as orange. You got a straight line resistance. Price did make a lower high, but we're making higher lows, and we're moving towards that level. RSI is down, Treasuries are going down, and a very simple way to find this without actually checking all the charts is, for example, here. And you don't have to read the whole thing over here. You can just see here, gold up, boosted by US Treasury yields, which are retreating. And then all you need to do is come down here, find US Treasuries see what's up, and you can see that they are under pressure. That doesn't mean gold's going to rally today. It's already up 1%, and we did trade it. Let me show you. I recently entered this trade over here because of this tick chart over here, 61.8. But we did compound this thing here, made 2.5K so far in overalls. And the first trade we took was over here. There it is. There's the entry. And I just want to show you why. Again, fibs, very simple, top to bottom. And we had 61.8 right there. And there's the trade. Boom. That's the entry. And then compound, compound, compound. Each of the dips, as price was coming down, like here, came down, came to the next fibs of this level here on the 50 ticks, gave me reasons to go in. And I just kept doing that. And as you can see over here, price action is holding this structure towards the downside. Lots of support here. Now, there is also resistance at the top. So if price can't break out, I'm going to get out. I'm going to make myself a couple of €100 and I'm going to be out of this trade. But if it breaks out, I'll start looking for reasons to compound. All in all, what I'm trying to tell you right now is that the best types of trades that you can take is when your system, whatever it may be, lines up to fundamentals or momentum. Let me give you an example. What happened with Bitcoin a couple of months ago, I think back in January when Tesla came out and said that they bought Bitcoin, that is a major fundamental driver or sentimental driver. And then all you have to do is buy the dip, buy the dip, buy the dip. But you also shouldn't overstay your welcome. But when you have such a big fundamental driver, and if you try to get in earlier into this, if you predict in some way that this could be happening, then you reap the rewards. But you also need to remember that market teams don't last for forever. Look at the coronavirus example. Last year, everything ran down, everything crashed. Why? Because of a run for cash scenario. Bitcoin dropped down to like 3K. US indices, Euro indices, Asia Pacific, everything dropped. Stocks. The only thing that went up was the dollar. But that also didn't last for forever. If you guys remember, it lasted like 2-3 months. And then boom, the fundamental drivers of the market changed. Now, you don't have to predict them. You just need to know that they're occurring, and you need to think, how long can this specific market theme be a part of this market? And then all you need to do is have a system that tells you when to enter, where to exit, and ride it. I'll be straight with you. I opened gold in the morning. I took a small stop loss. I waited a little bit more. 50 ticks gave me an example or gave me a reason to enter, and then I started building up my position. I still think there's a lot of potential room for upside. Maybe not now. It could start ranging in this area. We don't know. That's one thing we don't know. But what I do know is that if treasuries continue to drop, this here has a very good chance of working out. A very good chance of working out. Anyway, in overalls, all I wanted to tell you is that the best types of trades you'll ever find is when you connect momentum or news, which is basically market themes, to a specific asset. To end this video, I just want to continue and go over to WTI, for example. WTI has two very important potential fundamental drivers. One is the meeting or the news that we have with Iran and the US. If we have any kind of comments regarding those sanctions, especially from the US side, that could be a major mover for WTI. While also on Wednesday, we have the US crude oil inventories, which have been significantly dropping over the last couple of months. We also have the inflation problem. And all of that could create decent movement on WTI. I believe for now it could make a push towards the upside, because if we look at the structure of this market, and we go on the 4-hour chart, all we're seeing is pretty much higher highs and higher lows. Now look at this. Another reason for me to explain this to you. This is the structure low of this market. So this low never broke. Basically, price action gave us a reason to enter. So if I use this the way we use it, price has come to 38.2 and 30, made a head and shoulders on the RSI. So low, lower low, higher low, pretty much a head and shoulders, and it made a push. So what I'm doing now is I'm waiting to see how price will react on this. I had a reason to take it long, and as you guys saw here, I do have two positions. One is on gold, one is on WTI. Both are long right now. And if we manage to break out of this, I'm then waiting to see how price will behave here. But yeah, I think that there could be big moves on WTI, or in overalls, I don't know how big the move is going to be, but there is going to be movement, either down or up. And by being proactive towards what you see on the charts and know the news or know what's going on in the markets, you get to proactively react to price action and make a profit. Anyway, I hope this video helps you. My name is Dennis. I'm one of the lead traders at primetraders.com. You can check out our signature to learn more about what we do. And if we can help you become a better trader, then our mission is achieved. Thank you and have a great trading week.